Well, good afternoon then, folks, as we head into US trading on Tuesday, the 27th of June. Now we'll have a flick across the headlines, see what's going on in terms of any fresh fundamental drivers. We'll jump across to the monitor and then over to some charts and the calendar. But to start with this, you can see US stocks, S&P 500, Nasdaq futures edge higher ahead of economic data. Economic data pretty difficult to kind of wrap your head around when it comes to US stocks at the minute. But futures tracking the S&P 500 rose on Tuesday ahead of economic data. They could offer hints on the Federal Reserve's monetary tightening plans. They seem to have different reactions to all the different news releases at the moment, but we'll try and make sense of it once we jump across to the calendar and have a quick look at those durable goods orders once we get around to it in a minute. Apart from that, really all we've got to go off and fresh kind of hawkish comments from the ECB. Christine Lagarde had a speech at the ECB's forum on central banking this morning at 9 a.m. where she reiterated her hawkish stance, mentioning that inflation in the Eurozone is still too high and is going to remain too high for far too long. There is still work needed to be done in order to cool down inflation, which will then come in the form of further interest rate hikes, and there is no end in sight for interest rate hikes at the moment. That has boosted the euro, pushed the euro higher across the board over the course of today's European session, and maybe that is likely to continue as we head on into the trading sessions ahead. But that's not unexpected. These central bankers, when they are speaking at this forum, will likely reiterate their hawkish stances. What currency goes up and what currency goes down probably depend on or what currency goes up probably depends on who is talking at that particular time. So we had Christine Lagarde this morning with some hawkish commentary suggesting there is no end in sight in terms of interest rate hikes, as I just said, and that has sparked a rally across the euro and been a little bit negative for the DAX. Apart from that, we don't really have a great deal to go off in terms of fresh headlines that we have not covered on today's European video. So we'll jump across to the intermarket monitor. As you can see, US equities are now flat. It was a bit more positive to start the day, but we'll jump over to some charts now in a minute. European equity futures, kind of negative across the board off the back of those hawkish comments from Christine Lagarde. But Asia Pacific stocks, commodities, all a bit mixed. US bonds are now a bit mixed. You can see, yields are a little bit mixed. As you can see, global bond yields are a bit mixed, but the US dollar has not reacted positively to that data release, but which is a bit difficult to wrap your head around. But we will have a look. Well, there is reasons for it, but we'll have a look once we get around to the calendar and then explain it. But FX land pretty choppy across the board today, other than the euro, which is clear euro strength off the back of those comments from Christine Lagarde. But we'll jump across to the calendar and we'll have a quick look. You can see these durable goods orders out of the US. Consensus was for minus 1%. We actually did come in plus 1.7%. Once you exclude the transportation figures, again, consensus was for minus 0.1%, but we had a boost of 0.6%. So some positive numbers, from the from the US. But we'll come across to equities, and equities are now rallying off the back of that, which is understandable. Positive growth or positive manufacturing figures can be are positive for stock indexes, so that's not really too much of a surprise, the fact that stock indexes are rallying higher. But you get the US dollar, which has popped lower off the back of that. Now in terms of kind of trying to wrap your head around it, markets have taken positive data out the US and they've said negative for the negative for the currency and positive for the stock index. Now, how that's negative for the currency, I'm not quite so sure. Positive numbers, technically you could spin it in a way where they're likely to continue hiking interest rates. That's likely to be negative for the stock index and positive for the currency. So in terms of why the US dollar is selling off the back of that, I'd have to read into each of the individual numbers and try and work that out, but understandable in terms of the equity markets. In terms of the US dollar, a little bit of a surprising move, if I'm being perfectly honest with you, but maybe they're looking at those ECB comments and the fact that this US data is out of the way. Maybe that's a reason then to sell the dollar, but slightly tricky to work here to wrap your head around in terms of US dollar selling off the back of that, but stock index is higher off the back of that is not too difficult to work out once you obviously point towards solid manufacturing figures. Apart from that, you got yields pretty subdued, no massive movements. But again, the S&P, I'm saying a slight bit higher. It's not a massive move higher, just a slight counter move to the trend that we have been seeing. Oil had a bit of downside earlier on in oil, no clear driver of that, but down a little bit over the course of today's session. But as I said, no clear driver, so no clear reason as to why that has moved lower. Gold choppy sideways, remaining glued to this 1930 round number. It does make sense for a little bit of downside potentially on gold. Expectations for interest rates to be higher for longer are understandable when it comes to the price of gold. You can get yourself on a bit of a trend line there for yourself, which you were holding to or are looking at holding to across there. But what you do also have, I think, something of note is this kind of flat bottom across here, plus these lower highs then across here. Maybe if I even judge that off these lower highs across here, you do have a bit of a descending triangle across this, being capped by 1930. So as long as you remain below 1930, if you can't get below these lows, bit of a descending triangle, which goes in line with this longer term trend, as you can see, which also goes in line with the fact that interest rates are going to be higher for longer in the US, which is a reason as to why gold may push lower, judging off the fact that gold is a zero yielding asset. Gold does not like the price of gold does not like interest rates being higher, as obviously you can generate more yield from other assets. But apart from that, that's really what we're looking at over the course of today. You see US dollar continues to sell off. I think that dollar CAD one's maybe one to keep an eye on. You can see these Canadian inflation figures, maybe not dollar CAD with the fact that the dollar's selling off, but these in Canadian inflation figures as well. We were looking for, personally I kind of would have been hoping for these to get up 4.1% and beat consensus, due to the fact that we did have a surprise rate hike from the Bank of Canada a couple of weeks ago. If inflation continues to remain sticky, couple that with the strong retail sales, strong housing figures from a couple of weeks ago out of Canada, that would be a decent trade for some Canadian dollar longs. But the fact that that's disappointed, it's disappointed. It's not really disappointed in terms of getting inflation under control, but consensus 3.9, actual 3.7, the headline figure reducing at the rate that markets were expecting, plus a slight miss on inflation in terms of the month-over-month figure. That seems to be a CAD negative at the moment, and that probably puts paid to any thoughts of further hikes from the Bank of Canada, as that is exactly what they would want to see in terms of the rate of inflation. But not a massive amount to go off as we head into trading this afternoon. These figures have sparked some upside in stocks, which is somewhat understandable. US dollar selling off the back of that, I can't really work that one out just yet, but I'll have to dive into each of these figures, see what the individual components mean. But as of now, stock index is higher, is what is going on.